Hi crypto kings and queens, welcome to my channel. My name is Natalie. In today's episode, I'll show you exactly why I do believe that we will reach back up to these Fibonacci levels on Bitcoin around 22,100 and 22,500. We already saw the market broke above this previous resistance. We created a higher low to this level, so now we can continue to see the market giving us higher highs and higher lows until we come to the 12-hourly Fibonacci, and then slowly and steady we could potentially reverse back down. Remember, I'm no financial advisor. You need to look up everything yourself first, but please guys continue looking at this video and I'll show you exactly why this could happen and what could potentially happen on Ethereum. Let's go. So we're starting off on Bitcoin on the weekly chart. The market came up, retested a Fibonacci 50% at 24,430 precisely. We saw a huge engulfing candle. We did engulf 3 weeks. Did we engulf with this candlestick? We go down to the daily chart now, and we can see more clear of what we are actually looking at, and we can start to use some tools now because we understand the overall picture, and the overall picture is that we are very bearish. And on the daily chart, the thing that we can use is this previous last higher low if we're looking to the left, and we're using that level for, because usually the previous higher low becomes the new lower high. Go down to the 12-hourly chart because we want to see where the previous little candlestick that goes against the trend is, and we have it right here at 23,530. We drag the Fibonacci back down to 20,786. With that, you can see how good we almost did combine the previous support, the previous higher low that we did expect, or where we can expect the market reverse back up to. And if we just adjust the box a little bit, we can now see that we are between these Fibonacci levels where we could potentially see the market now reverse back up to for a potential reverse back down. The same thing that we saw on the weekly chart. What did we do? We did combine the previous lower high with the lower low to calculate where the next lower high could potentially be. We retested a 50%, and this is the exact same thing we're looking at when it comes to the 4-hourly chart and the 12-hourly. Before we reach these levels on the lower time frames, you'll see that we have a option. This was something that we went through on today's live stream that we did have. Actually a really good live stream, I think, myself, because we were not only talking about what I think the market will do today, but also mindset. So if you want to listen to that a little bit, you can go and listen to that one, the live stream that I did have earlier today. I will put it at the end of this video. Okay, but we can see that the market saw this huge bounce that we did have, and we can also recognize that we have a resistance that we also saw the market broke above. And because we do expect the market to reverse back up to these Fibonacci levels, we can slowly and steady see how the market changed direction on the lower time frame. So we were consolidating for a couple of days. Market finally had the power to break above, and now we can potentially see the market slowly and steady give us the higher low against the Fibonacci levels. But to understand the move, we drag a Fibonacci from 21,100 back up to the high at 21,517. We came back down exactly now, retested a 50%, and now we have the market that continues back up from this higher low level because we are slowly and steady reversing back up. So that's why we see the market now potentially create higher highs and high lows till the higher time frames Fibonacci. We do a recap on Ethereum too. We drag the Fibonacci from high to low only to understand that we came back up, retested the 50%. We're also using a support trend line because that's the one representing the trend. We saw the market on Ethereum broke and retested the support trend line perfectly, and we still now expect the market to drop because we came up to the higher time frames lower high, which means that the next lower low can potentially be around $500-600. But before we reach these levels, we go down to the 12-hourly chart. I don't see anything special here, so we go down to the 4-hourly, and yes, we have to use this previous high at 1,873 back down to 1,561. And the same thing here. What we also can use is this previous support that that we did have, if this would have been a lower high, lower high, lower low, lower high, lower low, then we would have stayed below this level at $1,600, but that did not happen. We can definitely see the market break below again and then see a retest and a continuation. I don't think that will happen. Based on that, we just might need to see the market actually reverse back up to higher targets for then create the lower high and then see the continuation of the drop. I expect the market to come up to 1,717, potentially 1,753, but on the lower time frames we can already see the beginning of that. Okay, we saw the market created one low. Even if I would not have taken this buy position, we could see the market create the higher low. We saw the market broke above, market came inside of the support, the previous support, and if we're using another Fibonacci just to understand what's actually happening, we drag another Fibonacci from 1,570 back up to the high at 1,638. Market came back down precisely, retested the 50% again, and this could be where we see the market continue back to the upside. Another thing that we obviously can do too is that we're looking to the left and we're using this previous resistance also as a level to see if we actually will break above this level. This can also be important because we just might see the market reverse back up to this level at 1,650 potentially, then back down again. If we don't continue back up to these levels, we always use different levels that is before the potential 1,718 level, because you have one resistance, you have one support. So the market just might not have to come to these levels, but it's always good to look at the left, because remember now, if we're looking at the 2 daily chart, you see we have one huge candlestick, right? 2 daily, we have one huge candlestick. So we just might only see the market retest previous small levels inside of this candlestick before we actually reach these levels. So it's always very important to understand how volatile is the candlestick that we are fighting against, right? Very, very volatile candlestick after we retested a 50%, which is a very important level where we actually did expect the market to have big bounce from. And that's why we just might not see the market have the power to reach these levels. And looking at the weekly chart, that's the same thing. We have one huge candle engulfing candlestick. But if we would see that the market have some movements, I told you this on the live stream today, if the market only decides to reverse back up to 1,750 or $60 at the end of the week, this could potentially just be a wick that we see, and then after you see the body continue back down, because I strongly believe that this week we will continue to be bearish, but we just might only need to have one pullback to the upside to then see the market reverse back down. Because you see on the higher time, or you see on the weekly, you have one wick. You see the market one time was going down and tried to break this previous support, but never had the power to do it. So then it just went straight up, and this was the wick that showed us, hey, we tried to break it, we didn't have the power to do that, and now the market is going up. The same thing here, as I said, we just might need to reverse back up to retest certain levels for then continue back down. The same thing that we tried to retest or break this support, we didn't have the power to do that. You always have different levels where the market is retesting before it actually is doing the right move. So that's why on the lower time frames, what we're looking at is a lower high, because a lower high is the one that's get created, and then after the lower high we see the drop. So the drop is what we're waiting for. The push back up to these Fibonacci levels will only be a wick on the higher time frames candlestick. So remember that we always have to have in mind what the story before was, before we actually can say, hey, this looks like we're going up. No, it does not look like we are going up. After we retested the 50%, after we broke the support trend on the daily, we also broke the last higher low. You can see it right here. And we are retesting also. We did break the previous higher low right here too. Like, we did break it. We're retesting it right now. And I don't think that we will have more push back to the upside now. I do believe that a small retest of one of these levels on the lower time frames will happen. But then I strongly believe that we will have the market reverse back down. So these are the levels that I'm looking for and looking at right now on Ethereum. We just might pull back up to the resistance or break above, retest these levels. So have this in mind. This does not have to happen, but always be aware the candlesticks, the levels, lower highs, lower lows, etc. Market is in a downtrend, so expect the market to be bearish this week. Don't forget that you can also receive the best bonus available right now on BYBIT up to $4,450 by using the link in the description down below the video. This is also how you're supporting me, so I'm always available for you. As always, the good thing when it comes to BYBIT is that when we hold up positions for a longer time, we have the low fees, which is very important when it comes to cryptocurrencies. Thank you so much, guys, for looking at this video together with me. I hope you did enjoy it. Don't forget to subscribe to the channel, hit the notification so you know when I am live next time or when I do have my daily updates. Until then, I hope everyone will have a great night, morning, wherever you are in the world, and we see each other next week. Love you, bye.